So, so today we are going to talk about taxation of municipal bond interest. Generally, municipal bond interest is tax exempt. That is, you don't need to pay any taxes. They raise money for the public purposes like constructing buildings, highways, hospitals, schools, like that. In that case, interest that you receive is tax exempt, but still there might be capital gains. But there might be capital gains. So how do capital gains arise? So if the bond value is like $1,000, where they are paying interest rate at 6%, the the value might change. That is due to interest rates. Again, if the interest rates increases, the bond value falls. If the interest rates decreases, bond value rises. So now the interest rate is 6%. If the interest rate falls to 5%, 4%, 3%, like that drastically, the bond value might rise to 1100, 1150, $1,200. So if the taxpayer sells the bond, he gets $1,200 minus $1,000. $200 will be subject to capital gains. And if the municipal bond raises money for private activities, then the bond is known as private activity bond. In that case, so what exactly means private activity means construction of any playgrounds, something like casinos, something restaurants, like that, for any private activities. In that case, the interest that you receive on the private activity bonds is fully taxable. But there is an exception to private activity bonds, that is like but there is an exception to private activity bonds, that is like qualified private activity bond, where where if they are raising money, the private activity can be up to 5% of the proceeds. Sorry, 5% of the money that they are raising, subject to maximum of $5 million. So let me just take an example for this private activity bond, qualified private activity bond. Suppose they are raising money like, maybe let us take an example of $200 million. In that case, a private activity is like $20 million. But we have the rule, private activity can be up to 5%. $200 may 5% is like 10 million dollars. It is like up to 5%, but it exceeds the $5 million by $5 million. So it is exceeding $5 million. So in that case, interest that you receive is fully taxable. See, the only thing is that private activity can be up to 5% of the total proceeds that they are getting, but again, that is subject to $5 million only. If it crosses $5 million, then the interest that you receive is taxable. This is with respect to the municipal bond interest and qualified private activity bonds. And the last thing is that in the case of you receive 1099, in the case of municipal bonds, in that case, if there is any qualified private activity bond, it has to be separately stated in your return, and in AMT applies in this case. Again, what is AMT means? So rich guys taking excess deductions and excess credits so that their taxable income decreases, so that they pay less taxes. So the IRS asks you like, it recalculates like by taking the taxable income, they add back certain amounts, and they arrive at new taxable income, and they calculate the tax rates. This is known as alternate minimum tax. For this purposes, okay, one second. For this purposes, the interest that you receive on qualified private activity bonds, that is included here. Even though it is not taxable, it has to be separately stated in your form 1099 that you are receiving. So that's it for the municipal bond interest.